Ladies and gentlemen, here in this video, we will discuss what happened today in markets, the pre-CPI kind of movement that you're seeing, and why CPI coming out tomorrow morning could be the biggest catalyst throughout the rest of this year and cause a pretty significant rally if it comes in good, or could cause a pretty aggressive downside reaction in markets if it comes in bad. I will also share with you my personal expectations for CPI as well. So good old Nick Timiraos always shares the expectations for CPI from your major banks the day before CPI. So that is what you're looking at here. He also writes, economists who produce detailed inflation forecasts expect the November CPI to show that core prices rose about the same as in November, up 0.27% to hold the 12-month rate at 3.3%. The median forecast has headline CPI rising to 2.7% from 2.6%. Okay, so when you're looking at this, the lowest estimate from institutions looks like Bank of America 0.23%, Employee America 0.23%, and Moody's as 0.23%. So if we come in around 2.3%, that would be better than generally expected. Now, the best case scenario is we come in lower than 0.23%. Best case scenario is all of these banks are wrong, and CPI comes in at like 0.19% month over month. That is when or how I could see a much more euphoric market start to build. Anything like 0.15% month over month, which would be, almost... that would be more than a standard deviation or two standard deviations better than expected. You would really see a euphoric market into year end. So that's the upshot scenario, is expectations are kind of high heading into the CPI report for November, considering energy markets were pretty well behaved last month. Now, on the high side, you have UBS here at 0.31%, underlying inflation at 0.3%. You also have Goldman Sachs at 0.28%, and PNB Paribas at 0.27%. So there is kind of a wide spread between the highest estimate and the lowest estimate. Highest estimate 0.31%, lowest estimate 0.23%. So, I mean, that's a 0.8% difference, 0.08% difference. That's quite a large spread. Now, if we fall between that spread, I think you get, again, kind of bull market, stocks do well, but not a euphoric kind of rally, right? At least until we get the Fed meeting out the way and until you get, just a lack of real risk catalyst. So that's probably the most likely scenario, is we just fall in line with expectations. The median forecast is 0.27% month over month. So technically anything lower than that will beat expectations. Like a 0.25% number would be a pretty good number. But anything lower than that would be incrementally better. Now, the risk would be if we come in on the high side. If we come in higher than 0.31%, then that would be higher than any of these other, bank estimates. If we come in at like 0.35%, that's definitely going to dampen the mood on this market rally quite a bit, because that would be on a 12-month annualized basis, 4.2% inflation. That's a little too high. That may invite that higher for longer narrative, and it might bring up more concerns about that second wave of inflation. And if the Fed would need to raise rates in 2025, it would be not a great scenario, as valuations are as high as they are. Now, ultimately, I think in 2025, inflation will surprise to the downside. And this November reading does incorporate the Trump election win, and that is already having some pretty big impacts on sentiment around the economy and just how people are feeling in their personal finances. You can see today the story of the morning was the Small Business Optimism Index that rose to 101.7 in November, significantly above the estimate of 95.3, and the largest month-over-month increase since July 1980. So you have not seen a rise like this since 1980. She says here, pretty clearly in response to the election, improved expectations across most categories drove the surge. Literally everything besides current inventory, which is a good thing. You don't want inventory like high. That's where you get negative revisions to GDP. The plans to increase employment was up 3 points from last month. Plans to make capital outlays up 6 points since last month. Plans to increase inventories up 3 points. Expect the economy to improve up 41 points from last month. Expect real sales higher up 18 points from last month. Current job openings up 1 point. Expected credit conditions up 1 point. People say that now is a good time to expand, up 8 points since last month, and earnings trends up 7 points from last month. So today was really a sign of some optimism out there in the economy. This also comes at the same time. Yesterday, we got data out that says the share of Americans who expect they will be better off financially over the coming year jumped in November to its highest level since the COVID-19 pandemic, according to the New York Fed's consumer survey. So personally, I would be pretty surprised if you're seeing all these consumer sentiment metrics going up and also see a big upside surprise on inflation. I don't think those two things go hand in hand, especially not for a prolonged period in time. Could you see a 1 month off kind of thing? Yes, but this is highly suggestive that we're probably not going to see that much inflation next year, or at least it's not going to be as high or sticky as people think. And if inflation is higher than expected next year, you're going to see these consumer metrics, these surveys, really come down again. Now, to the point I made earlier in this video, markets really are not that euphoric. I like to look at the percent of stocks trading above their 50-day moving average. If you want to see the last time markets were truly euphoric, like not 2021 level euphoria, but certainly euphoric, was that rally from November until the start of January of 2023, right? November of 2023 through January 1st of 2024, you've seen an everything rally. The percent of stocks trading above their 50-day moving average went from about, about 15, 20% or so in October of 2023 during that correction to as high as 87% of stocks trading above their 50-day moving average by Christmas, by December 25th. Okay, this was a very broad-based kind of euphoric market during that time. Now, what you've seen recently is you've kind of been in a range between like 65 to really 50. Okay, if we do see things that you get more euphoric, you can tell just how euphoric they are from this percent of stocks above their 50-day moving average. And if we could get back to like the 80s, yes, that would be euphoric. And yes, markets would be a lot higher from now into year end. So there's definitely room for things to get juicier to the upside. And again, I'm not expecting this will continue throughout all of 2025. I do think there will be a correction in Q1 of 2025. I think markets, they're probably going to overshoot to the upside. December's probably going to be a good month as long as CPI does not disappoint tomorrow. We already know the Fed's going to be cutting rates with a 90+% probability, and we may overshoot and get too bullish and be due for a pretty dramatic correction in Q1. Depends how you look at things. If you look at that as a buying opportunity, that's exciting. If you look at that as you're going to lose money in the short term, you probably should not be invested anyways. Okay, so if you're not excited about a correction, then you're probably 60 plus years old, and or you should not be investing in markets to begin with. Okay, now CNN's Fear of Green Index is sitting at 50 today, so it's neutral. Like, sentiment is not that euphoric. Like, I don't understand the argument that a lot of people are saying right now that markets are too euphoric. Just go on CNBC, and if you guys have not done this, I very much recommend that you do, and just listen to people. I mean, they talk like the market's 2021, and I think that can somewhat fuel the upside when there's a lot of skeptics in our markets, talking about our markets. That actually is what you need to drive markets higher. I would be more concerned if, the markets were euphoric and everyone was bullish, right? That would be more of a red flag in my opinion. But yeah, CNN Fear and Greed Index sitting at 50. It's neutral. Market momentum is greed. Stock price strength is fear. Stock price breadth is fear. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand is fear. Junk bond demand also in fear. The only indicator that does look a little on the optimistic side is the AI Investor Sentiment Survey. After hitting a 1-year bearish high on November 27th, you did skyrocket on the bullish side of the indicator from 37.1%, which is very low, all the way up to 48.3% just a week later. I mean, that is a little on the stretch side. The 1-year bullish high is 52.9%, and that was again, December 20th, 2023. That was the last time we were this bullish. Again, the last time we were euphoric at all, as I talked about previously, was right before we started 2024. And you're getting close to that level. Okay. Is this something you should hang your hat on and be super confident in? No, it can be pretty volatile for not a whole lot of reasoning. Now, with that said, let me give you my expectations for CPI tomorrow. Now, I may be biased here, but I think CPI is going to come in either lower than expectations or much lower than expectations. Okay, why that is because the price of oil actually went down last month. And I think really when it comes down to it, business owners, people in the economy expect lower inflation under Trump. Now, the data can be very mixed on this, but from everyone I know, I think like 75% of people I've talked to in my real life and personally voted for Trump because prices were lower under Trump. Okay, there was this expectation that if Trump wins, prices are going to come down. We all know prices are not going to come down unless we have some kind of recession. But the rate of growth in prices will probably, come down, right? And I think some of that could start to kind of make its way into that November CPI report. Now, also worth mentioning is there was a lot of early promotions around the holiday season, because the earlier you can promote, the earlier you can start to get people buying things, the more they may, buy something in November, early November or something. You can give them a promotion then, a discount, and go ahead and buy again on Black Friday and then again on Cyber Monday, right? The more you can get someone to spend earlier in the holiday season, the better off you're likely going to do as a business. Business Econ 101 right there, okay? So I think that with energy and the expectation that Trump will drive lower inflation, again, from the average citizen, the average business owner, that's their expectation. That could leave us room for a surprisingly low number on CPI tomorrow. And that would be the best case scenario. I mean, that would cause aggressive rallies across our markets, probably until the end of the year. And if I were to put this into a probability perspective, I think there's likely a 25% chance that we could come in between 0.15% and 0.20%. That would be really good. It's probably like a 5% chance we could come in below 0.15%, something like we've seen over the summertime where the Russell gained 7% in a single day. Like, it's not impossible. That's not my exact expectation. I would give it about a 5, maybe 7% chance. So we're at about a 30% overall odds of that. I would say there's probably 60-ish% chance of kind of inline numbers, plus or minus 0.2%. And then I would say there's a 10% chance that we come in around the highest estimates for, that major banks have, around 0.31%. So I don't have, high fears about tomorrow's CPI report. And I don't really think you should either. But again, your situation is going to be different than mine. It's going to be different than the next guy. If you're trying to speculate heading into the CPI report, I have a bias to thinking the numbers are going to come in low. They may not. And you just want to be careful with position sizing because anything is possible. And especially when homeowner equivalent rents is the way that we calculate rent inflation, and rent inflation is the largest current component of inflation. it's just faulty all around. It's not the real inflation rate in the economy. So that data can also be pretty volatile sometimes. So ladies and gentlemen, let me know what you think about all of this information down below in the comment section. What is your prediction for CPI tomorrow morning? Have a great rest of your day, and I will see you in the next one.